Tesla Inc., led by CEO Elon Musk, designs, manufactures, sells and leases electric vehicles, energy generation and storage systems, and develops autonomous driving software and AI robotics. Its history traces back to 2003 when Martin Eberhard and Mark Tarpenning founded the company, with Musk joining in 2008 and driving its modern mission to accelerate the global transition to sustainable energy. Tesla's business model is diversified into three core categories: automotive from its full lineup, including Model S, Model 3, Model X, Model Y, Cybertruck, and Semi; energy generation and storage via Powerwall, Megapack, solar panels, and its solar roof; and innovation in autonomous driving and general AI through its full self-driving FSD software and robo-taxi initiatives. Revenue streams include vehicle sales at retail and leasing, regulatory and clean energy credit sales that significantly boost automotive profitability, energy product deployments, software subscription income for FSD, and licensing of its self-driving technology. In 2024, Tesla delivered approximately 495,930 vehicles globally, a slight decline from prior projections, while generating annual revenue of $97.69 billion. Net income for the year declined 52% to approximately $7.13 billion, down from $15 billion in 2023. Gross profit was $17.45 billion, translating to a gross margin near 17.9%. Operating income declined to $7.08 billion, representing an operating margin of 7.2%. Research and development spending increased by 14% to approximately $4.54 billion, accounting for roughly 5% of revenue. Free cash flow fell 17% year-over-year to $3.58 billion. Capital expenditures were elevated, around $11.34 billion, largely driven by manufacturing expansion, AI infrastructure investments, and development of Dojo and robo-taxi systems. At year-end, Tesla held cash and equivalents totaling approximately $16.14 billion and maintained negative net debt of roughly negative $2.52 billion due to low debt balances. In the second quarter of 2025, revenues declined roughly 10% year-over-year to approximately $21.3 billion. Automotive revenue fell, impacted by lower average selling prices due to fleet mix shifts, price concessions in key markets, and foreign exchange headwinds. Total vehicle deliveries came in around 384,122 units, a decrease of nearly 13.5% from the same period a year earlier, although sequentially up from the prior quarter. Operating income slipped to approximately $1.2 billion, a margin of about 5.5%. Free cash flow swung negative nearly $2.5 billion, mainly due to inventory buildup of around $2.7 billion and $1.0 billion in AI-related capital expenditures. Management under Elon Musk and complemented by leadership in AI and energy initiatives remains highly visionary, emphasizing ambitious goals around robotaxi deployment, humanoid robotics, and energy storage scaling. Musk's political involvement and public statements have stirred regulatory scrutiny and impacted consumer sentiment in markets such as Europe, especially Germany, where Tesla's fleet share declined sharply. Regulatory credit dependence is a key debate, with credits contributing nearly half of profitability in prior years, raising concerns about sustainability as regulatory credit programs fade. Competitive positioning has shifted significantly. Tesla remains a software leader globally in EV autonomy and charging infrastructure, but it has lost its global volume lead to BYD, which sold over 4.2 million vehicles in 2024. BYD is rapidly advancing battery, AI, and cost efficiency capabilities, eroding Tesla's pricing power. Legacy automakers like Volkswagen, Ford, and GM are increasing EV offerings aggressively, often prompting Tesla to match discounts to sustain demand, pressuring margins. In energy storage, Tesla's segment growth, up 67% year-over-year in storage deployments to 9.6 GWh in Q2, is outpacing some competitors, but it's encountering rising competition from companies like Sonnen and Enphase. Peer benchmarking shows Tesla trading at premium valuations. Based on trailing 12-month net income, its price-to-earnings multiple ranges from approximately 40 to 120, depending on whether regulatory credits are included. Such multiples far exceed those of traditional automakers or energy companies. Enterprise value relative to sales and EBITDA is often several times higher than peers, given Tesla's positioning as both software-oriented and hardware innovator. Discounted cash flow valuation shows wide variability. A sum-of-the-parts model that separately values the automotive, energy, and AI robotics segments results in valuations from $140 billion to $1.5 trillion US, implying a per-share value range from about $45 to $470 US. Conservative DCF models, using discount rates near 20% and low terminal growth, produce intrinsic per-share values near $100 to $150 US. Mid-case DCF assumptions: long-term automotive growth of 5%, energy growth of 10%, AI contribution ramping later, terminal growth at 2%, weighted average cost of capital around 10%. Yield estimated fair value roughly $200 to $300 US. Analyst sentiment is mixed. Some brokerage firms project price targets between $115 and $350 US. UBS remains bearish at $215, citing overvaluation. JP Morgan is among the most pessimistic at $115, given delivery declines and broader macro concerns. William Blair downgraded Tesla to market perform based on fatigue over Musk's political entanglements. On the bullish side, Wedbush supports up to $500 US, grounded in China's recovery. Cantor Fitzgerald retains an overweight rating with a target of 355, and Wedbush highlights returning sales growth in China as a catalyst. Technically, Tesla stock recently traded near $327 US. It has suffered nearly 20% decline since early 2025, underperforming the broader growth tech cohort. The stock remains above its 200-day moving average, but support between $290 and $300 US serves as a potential floor, while resistance appears between $335 and $400 US. A breakout above 400 would likely confirm bullish momentum. Breakdown below 290 could signal further downside pressure. For investors, strategic recommendations vary by risk profile. Value-oriented investors focusing on downside protection and intrinsic valuations may view current levels as elevated and wait for pullbacks toward $200 to $250 US prior to initiating or adding. Those with higher risk tolerance and conviction in Tesla's AI ambition and energy transition leadership may accumulate shares in the $300 to $310 US range, balancing potential upside from robotaxi and energy segments. Momentum traders may prefer confirmation with resurgence above $400 US before scaling positions. In summary, Tesla's transformation from EV maker into a diversified technology company continues to define investor expectations. Its strengths include an integrated hardware-software ecosystem, scale in energy storage, leadership in autonomy, and ambitious AI initiatives. Challenges remain in slowing EV demand, margin compression, heavy capital expenditure for AI infrastructure, regulatory headwinds, and intensifying competition globally. Tesla remains fundamentally compelling but richly priced, and investment decisions should align with individual views on execution risk, macroeconomic outlook, and the timing and viability of robotaxi and AI monetization.